Welcome to Iron Financial, the place where we forge stronger portfolios by stress testing market weakness. I'm your lead analyst. Today, we're putting BioLineRx, ticker BLRX, right on the anvil. You're looking at a biotech company that is the absolute textbook definition of high risk, high reward. On one hand, they might have a blockbuster drug in the works. On the other, their financial situation, well, it's precarious to say the least. And I'm your market skeptic. Look, that's putting it mildly. Their latest financial report is a puzzle wrapped inside a riddle. I mean, how does a company's revenue completely evaporate? We're talking fall off a cliff, but at the same time, their losses magically shrink. The numbers just don't seem to add up on the surface. So that brings us to our central question today. Is BioLineRx meticulously building a fortress for future growth, a structure that can actually withstand the coming storm? Or is this whole thing just a house of cards, one little breeze away from total collapse? Let's dig in. All right, to get to the truth here, we're going to hammer this thing apart into 5 key sections. First up, we'll survey the biotech battleground, basically get a feel for the market sentiment and figure out why this stock is under so much pressure. Then we are going deep into their pipeline. We need to know, is this all just hype or is there real hope locked up in those molecules? After that, we get to my favorite part. We're going to stress test their financial foundation. From there, we'll start the cash burn clock, the most important clock for any biotech, to see exactly how much time they have left. And finally, we'll bring it all together and deliver the Iron Financial verdict. Okay, let's set the stage. BioLineRx is at a seriously critical point in its life. The market is trying to weigh this immense, potential future promise against a really painful present reality. And that tension, that conflict, it's written all over its stock chart. The chart tells the story of a company walking a tightrope 50 stories up, and folks, there is no safety net. So what is going on here? Let's take a closer look. And the market has just been absolutely brutal to these guys. You can see it right here on the chart. The stock is scraping the bottom, trading just pennies above its 52-week low of $2.30. Now, on the surface, this screams that investors are losing faith, and they're losing it fast. But the question we always have to ask here at Iron Financial is, why? Is this a sign of some deep fundamental weakness that totally justifies this sell-off? Or is it possible this is a massive overreaction to some short-term headwinds? To get that answer, we've got to go much, much deeper than the stock price. And that right there is the million-dollar question, isn't it? If you're looking at BioLineRx right now, this is what you have to figure out. Is this one of those golden opportunities to buy a future giant at a bargain basement price, a true deep value play? Or is this a classic value trap? You know the kind, a stock that looks cheap for a very, very good reason and is just poised to detonate your portfolio? The answer, as it almost always is, lies in the numbers, and these financials are sending some of the most contradictory signals I have ever seen. And here it is. This is the core of the paradox. Just look at this. On one hand, over on the left, BioLineRx's revenue didn't just fall, it cratered. From almost $29 million down to just over $1 million. That's a 95% drop in a single year. In any normal universe, that's a death sentence for a company. But then, look at the right. Their net loss, the actual bottom line, didn't explode, it shrank by 75%. This makes no sense. It seems to defy financial gravity itself. How in the world does a company lose almost all of its income, yet somehow get more financially stable on paper? Well, the answer is in some of the most drastic, gut-wrenching strategic moves a company can make.
The only way to possibly make sense of those numbers is to understand what the company is actually building. You have to ask yourself, why would any company intentionally let its revenue collapse like that? It's because they've made a decision. They've decided to bet the entire farm on the future. The whole bull case, the entire reason this company still has a pulse and is worth talking about, is built on the massive promise of its clinical pipeline. So let's pull out the blueprints. Let's see what has the bulls so fired up.
So the absolute cornerstone of this company's future, their big Hail Mary pass, is a drug called GLIX1. Now, this is what they call a first-in-class drug, which means it works in a totally new way. And it's targeting glioblastoma, a really devastating and notoriously hard-to-treat brain cancer. There are tragically few good options for these patients. And they are literally about to start human trials, which is a massive milestone. But that's not all. They also have an already approved drug, modixafortide, which they're now testing for metastatic pancreatic cancer, another one of the deadliest diseases out there. So you're looking at a company with 2 very legitimate shots on goal, trying to hit a home run in the oncology space.
And of course, the CEO, Philip Serlin, is painting a very, very pretty picture of GLX1. He's hitting all the right notes for investors, right? Compelling efficacy, favorable safety profile, and this is the big one for a brain cancer drug, excellent blood-brain barrier penetration. This is the language you use when you think you have a potential breakthrough on your hands, and it's exactly what the bulls are hanging their hats on. But hold on, let's pump the brakes here. When I see a quote like this, I have to raise the red flag. Preclinical models. Let's be very clear what that means. It means studies in labs, in petri dishes, in animals, not in human beings. And 90% of the time, that data does not translate to success in human trials. The road to getting a drug approved is long, it's expensive, and it is littered with the wreckage of promising drugs that looked fantastic in a lab, but were total failures in people. This is hope. This is not a guarantee.
And let's be crystal clear about the stakes here. Glioblastoma isn't just another cancer. For the vast majority of patients, it's a death sentence. A real breakthrough here would be revolutionary. It would be a game-changing event for medicine. And yes, the financial upside for the company that pulls it off would be absolutely astronomical. But the odds are just stacked so high against BioLineRx. The history of drug development for this specific disease is a graveyard of failed companies and shattered hopes. So the ultimate question for this pipeline is, can this one company defy the odds and succeed where so many others have failed? It's a tall order. You know, a promising pipeline is great, it's a nice story, but it is completely worthless if you don't have the cash to actually bring it to market. Hope does not pay for multi-million-dollar clinical trials. So let's get back to the numbers. Let's put this company's financial foundation back on the forge. We need to see if it's built of solid steel, strong enough to support these huge ambitions, or if it's about to crumble under all this pressure. I have to come back to this, lead analyst. This revenue collapse is genuinely terrifying. How can any company possibly survive, let alone fund incredibly expensive R&D, when its main source of income has completely vanished overnight? This doesn't look like a crack in the foundation. This looks like the ground floor has been dynamited. This has to be a 5-alarm fire. You're right, it's a critical point and we have to address it. But the answer isn't in what they lost, it's in what they cut. And their cost-cutting has been just as dramatic and, frankly, just as brutal as that revenue decline. Let's look at the other side of the ledger. So, while you're looking at that gaping hole where the revenue used to be, the company was busy reinforcing the core steel structure. This dramatically improved net loss we see right here, this is the direct result of a very deliberate surgical strategy. The goal was to preserve capital at all costs. They made some unbelievably tough choices, but those choices were deemed absolutely necessary to keep the company and, more importantly, its pipeline alive. And here, this is how they did it. This slide right here solves the entire mystery. Just look at that sales and marketing expense line. In 2024, BioLineRx spent almost $24 million. In 2025, zero. A flat, perfect zero. This is a radical move. They completely shut down their U.S. commercial operations for their one approved drug. They didn't just trim the fat, they cut off a limb to save the body. The goal was to slash their cash burn and extend their runway. The only question is this a brilliant strategic pivot or a desperate last-ditch gamble? Exactly. Let's call it what it is. This is not a story of newfound strength or fiscal discipline. This is a story of survival by amputation. BioLineRx has sacrificed its only revenue-generating engine in the United States to conserve every last drop of fuel for this GLIX1 moonshot. This is the definition of an all-or-nothing bet on the success of a single, very early-stage clinical trial. It's a massive, massive gamble. And that income they decided to keep? It's barely a trickle. As you can see, their entire revenue for 2025 came from just over $1 million in royalties from a partner selling their drug, APH-DA. That is a drop in the bucket. It is nowhere near enough money to fund the kind of ambitious R&D plans this company has. So the question becomes terrifyingly simple. How long can BioLineRx survive on this? To answer that, we have to start the clock. Right. And in the world of development stage biotech, nothing matters more than cash. Cash is king. It is the lifeblood that fuels the science and literally keeps the lights on in the lab. Everything else is just noise. So let's take a hard look at BioLineRx's cash on hand and calculate their financial runway. We need to know exactly how much time is left on the clock before it hits zero. So as of the end of last year, BioLineRx had just under $21 million in the bank. Now, to you and me, that might sound like a lot of money, but in the world of drug development, where a single late-stage trial can easily cost $100 million or more, this is a very small war chest. It leaves them with almost no room for error, no room for delays. So the critical question is, how fast are they burning through it? To figure that out, you have to go to the statement of cash flows. Now, it's really important to ignore that net loss number at the top. That's an accounting figure. The number that really matters to us, the number that tells the real story, is right here. Net cash used in operating activities.
This is the actual amount of cold, hard cash the company spent just to run its business. And for 2025, that number was about $8.1 million. Think of that as the speed at which their financial fuel tank is emptying.
Okay, so the math from here is pretty simple. You take the cash they have, that $20.9 million, and you divide it by their annual burn rate of $8.1 million. And what that gives you is about 2.5 years of cash left. Now, this lines up perfectly with what the company itself has been guiding, which is good. It tells us management isn't delusional. They have a realistic grasp on their finances. But is 2.5 years enough time to get to a major company-saving event? Let's look at the timeline. And this timeline, this is a ticking time bomb. It's really stark when you lay it out like this. So the GLIX1 trial is starting basically now. We'll get a minor piece of data later this year for their pancreatic cancer drug, but look at the bottom. Their cash runway ends in the first half of 2027. And the very first data from their make-or-break GLX1 trial is also expected in the first half of 2027. They are literally scheduled to run out of money at the exact same moment they might have good news. To put it another way, the rescue team is scheduled to arrive on the very same day the life raft sinks. There is zero margin for error. Any delay in that trial, any problem enrolling patients, it could be catastrophic. All right, we've examined the evidence from every angle. We have analyzed the pipeline, we've stress-tested the financials, and we've set the clock. Now it is time for the final judgment. Is BioLineRx a solid investment structure, or is it a house of cards just waiting for a puff of wind? Let's deliver the iron financial verdict. So the bull case is actually pretty compelling when you lay it out. You have a potentially game-changing drug in a massive market where there's a huge unmet need. You have a management team that has shown the discipline to cut to the bone to focus on that single most valuable asset, and you can get in on this story at a stock price that's near historic lows. But that bear case is just as strong, maybe even stronger. This company has virtually no revenue. Its entire future hinges on the success of a single high-risk clinical trial that has only just begun. They are walking that tightrope we talked about, and their cash runway offers absolutely no safety net if they stumble. They are completely dependent on the kindness of capital markets to survive. So here's our verdict. BioLineRx is the absolute definition of a high-risk, high-reward speculative biotech investment. This is not for the faint of heart. This is not for your retirement account. If you are even considering investing in this company, you have to watch their cash burn like a hawk every single quarter. Any sign that it's accelerating is a massive red flag. And you have got to track the progress of that GLX1 trial. Any news release about a delay in enrollment could be a death blow to this investment thesis. And be prepared for dilution. It is not a matter of if they will raise more money, but when and at what price. They will need more cash, which means current shareholders will own a smaller piece of the company. It is a certainty. Look, BioLineRx has made a bold, all-or-nothing gamble. They have stripped their company down to the bare studs, betting everything they have on the success of a single, powerful engine. The question you have to answer is this. Is this the foundation of a future biotech titan, or will it all just collapse under the immense weight of its own ambition? Only time is going to tell. Thanks for joining us at Iron Financial. As always, do your own due diligence, and we'll see you on the next one.
Quick disclaimer, everything I share is for entertainment and informational purposes only. I'm not a financial advisor, so please do your own research or talk to a professional before making any moves with your money.